Your next new Japanese car just got more expensive, and the reason is sitting in the White House. For the first time in half a year, sticker prices on Japanese cars bound for the United States are creeping upward. Why? Because the companies that once quietly swallowed President Trump's sweeping tariffs, Toyota, Honda, Nissan, Subaru, Mazda, and the rest, have finally decided to let American shoppers shoulder part of the bill. But here's where it gets controversial. Many buyers still believe the import surcharge is baked into the car's original price, not realizing that a political decision made thousands of miles away is now inflating their monthly payment. Let's unpack what changed, why it matters, and what it could mean for your driveway. From sponge to spreader, how the strategy flipped. Until recently, Japanese automakers treated U.S. tariffs like an annoying but manageable cost of doing business. Instead of raising window stickers, they trimmed internal margins, squeezed suppliers, or simply accepted lower profits to keep showroom traffic humming. The goal was simple: protect market share and brand loyalty, even if quarterly earnings took a hit. That playbook worked, until the math stopped working. With tariffs locked in place longer than anyone predicted, yen-dollar swings adding volatility, and raw material inflation refusing to cool off, the cumulative squeeze became too painful to hide. In short, the sponge got saturated. So, quietly but decisively, export invoices started inching higher in July. By August, the ripple reached U.S. port prices, and dealership software began printing larger total due lines. For the first time in 6 months, the average landed cost of a Japanese passenger vehicle ticked upward, according to fresh customs data compiled by Nikkei Asia. Oh, what passing through actually looks like on the lot. Imagine a popular compact crossover that used to sticker at $28,500. Under the old absorb everything model, the dealer could still advertise $28,500, even though the factory had to eat, say, an extra $1,200 in tariff expense. Today, that same crossover might list at $29,350. The automaker still absorbs a slice, but the consumer now covers roughly half. Multiply that by millions of units, and the industry is effectively shifting billions in tariff costs from corporate balance sheets to household budgets. And this is the part most people miss. The price bump isn't labeled Trump tariff surcharge. It's baked into the MSRP, freight charge, or option packages, making it almost invisible unless you compare month-over-month invoices. Why automakers changed their minds? A simple analogy. Think of tariffs as a leaky roof. For a while you can place buckets around the living room and pretend everything's fine. But once the buckets overflow and the floorboards warp, you have two choices: renovate the roof, reshort production, or ask everyone in the house to pay a little more for utilities. Japanese brands are choosing the second option, at least for now, because building new U.S. plants or reconfiguring supply chains takes years, not months. The broader ripple, beyond the sticker shock. Higher import prices don't just dent wallets, they tilt the competitive playing field. Domestic automakers suddenly have breathing room to raise their own prices without looking greedy. Used car lots see an uptick in traffic as shoppers pivot away from pricier new metal. Even auto parts suppliers feel the tremor. If fewer new vehicles roll off ships, demand for replacement components eventually softens. Meanwhile, currency traders keep one eye on the yen. A weaker yen normally helps exporters, but if tariffs wipe out that advantage, the Bank of Japan may rethink intervention strategies. It's a financial domino line stretching from Tokyo trading floors to a suburban driveway in Ohio. Controversy corner: who should really pay? Here's the provocative question. Is it fair for U.S. consumers, many of whom never voted for these tariffs, to foot the bill for a trade policy they didn't choose? Or should Japanese corporations continue absorbing the cost as a long-term investment in the world's second-largest car market? Some analysts argue that passing the tariff along is simply rational economics. If Washington insists on taxing imports, the tax will ultimately reach the people who demand those imports. Others counter that automakers are leveraging political cover to pad margins that were already razor-thin. Both sides can cherry-pick data to support their stance, and the truth probably lies somewhere in the murky middle. What happens next? 3 scenarios to watch. 1. Negotiated truce. A partial tariff rollback in exchange for new Japanese investment in U.S. battery plants could reset prices again, downward. 2. Status quo. Tariffs stay, prices inch higher every quarter, and consumer grumbling morphs into long-term demand destruction. 3. Escalation. Additional duties on auto parts raise the stakes, forcing even steeper sticker hikes and accelerating the shift to domestic production. Oh, your turn. Sound off below. Do you think Japanese automakers are justified in finally passing along tariff costs? Or should they keep shielding U.S. buyers? If you were in the market for a new car, would a $1,000 to $1,500 surprise bump steer you toward a domestic brand, or would loyalty keep you in the fold? Drop your take in the comments. Let's see where the community stands on this high-octane debate.